What's up, everybody? Welcome to another episode of the Stock Bros podcast. So today we are going to talk about the very popular brokerage, robo-advisor brokerage, Acorns. So Acorns is one I highly recommend for new investors. I actually have one. I have a lot of people in my family on them, love Acorns. So the really cool thing about Acorns that you can't really do with Robinhood or Charles Schwab or TD Ameritrade is you can invest your spare change through a roundup feature. So you link your bank account to your Acorns account, and then when you go, if you're at the grocery store and you're getting $15.50 of groceries, what it'll do, it'll round that $15.50 up to $16 and invest 50 cents into a pre-made portfolio for you. So let's talk about portfolios. So a portfolio is just what's a bundle of stocks and bonds and ETFs that you own. That's what a portfolio is. So Acorns actually has, I think it's 5 pre-made portfolios that you pick from. But what it does is when you sign up, it asks you a round of questions to assess your risk tolerance. So depending on how old you are and how risky you want to get with your investments, they'll match you up with the correct portfolio. So I think is a good rule of thumb, if everyone goes into the moderately aggressive portfolio. That's the one I picked. It has a good combination of ETFs that are large cap, medium cap, small cap, international ETFs, and it has a couple bond ETFs. So that way it's very, very diversified. It's very safe. Now you'll get around a 7 to 8% return on average. It's definitely not the highest returns. You could do it yourself on like Robinhood. If you knew what you were doing, you could pick out your own stocks and ETFs and get probably double that return on investment. But the thing is with Acorns is you don't have to know anything. It sets you up with very popular, very well-known ETFs. And ETF is, I guess I should cover what an ETF is. An ETF is an exchange traded fund. What that means is it's a group of stocks sold as one. So a very popular ETF is the S&P 500 index, which is the top 500 companies in the United States. So basically, when you're investing into an S&P 500 index fund, you're investing into Apple, Microsoft, Google, Facebook, Tesla, all of those companies. So it's a lot safer. So if one company has a bad week, a bad month, or God forbid something happens and they go bankrupt, you're not going to lose all your money because you have 499 other companies in that fund. So it's a lot safer. And on average, the S&P 500 index gives you a return of about 9% per year return historically, which is really good. So also in that fund, you'll have mid cap stocks, like which are emerging companies. You'll have small cap. You'll have international ETF, which covers all of the companies outside of the U.S. And then you'll have 2 different bond ETFs. So overall, I've had Acorns for about 4 months. I have a little over $1,000 in there with about a 7.5% return. So that's pretty good. You don't have to know anything about investing to have an Acorns. And there's a lot of people that will start out investing and they'll make a lot of really bad decisions. They'll buy a lot of really bad companies. They'll buy into a lot of bad stocks. And then it's just, if you want to be safe and you want to be smart about investing, before you start dropping money on companies, maybe open up an Acorns account, learn what the ETFs are, learn what all of this means and do your research before you start buying your own companies, your own stocks. So let's get into how Acorns works. So we talked about the roundup feature. So when you sign up for Acorns, they actually give you 3 tiers to pick from. You have a light, a personal, and a family tier. So the light tier is what I would recommend for everybody. It's $1 per month. And let's face it, we all spend $1 a month on way stupider things than investing in stocks and your future. So everybody could swing $1 a month. With $1 a month, you get a personal brokerage account, and it'll invest your spare change, and you can actually earn rewards on their website. You can sign up for surveys or whatnot, and they actually will put money into your account if you complete all these surveys or bonus programs that they have. So that's the $1 a month plan. So now you have the personal plan, which is a $3 per month plan. It's actually an investment account, it's a retirement account, and then you have a checking account. So some banks, like my bank, will charge a $15 a month fee if I go under $100 in my checking account. So maybe you'd want to open up a checking account. And then the other tier is a family tier. That's $5 per month. So that's for opening up a retirement account for your kids, plus your own personal account, plus a checking account. So I wouldn't recommend the $5 or the $3 one, to be honest. I would stick to the $1 a month plan. That's what I have, because $1 a month is $12 a year you're going to pay. Very affordable. But if you're only investing spare change, it may not be worth it, because you're going to want to, if you put like $5 a week into it and you do your roundups, it's definitely worth it. You'll definitely get everything that you put into it is worth it, and the fees won't overtake your returns. So it's important, if you're going to use something like this, use the roundup feature, which is really the main reason you would have this. And you're going to want to put in like at least $5 a week. Otherwise, it's probably not going to be for you if you just want to use it for roundups. So, I mean, you could start out with $5 a week and work your way up. When I first opened it, I did it for spare change and $5 a week. And then I moved to $10 a week and $20 a week. Now I do $5 a day. So it's a great way to dollar cost average at a very low cost. So if you did $5 a day, you're never really buying when the market's up too high. So, and it's a great way to build compounding interest and build wealth. So I will attach a link to join. And if you use my link, you'll get $5 invested in your account immediately, and I'll get $5 too. And Acorns, it's a little tricky. So when you click on the link, it brings you to a page that shows the $5 tier and the $3 tier. And then underneath it, it's going to say compare tiers. You're going to want to click that, and you're going to want to use the $1 per month. You'll still get the $5 invested. They like to do that so people will actually use the more expensive tiers. But unless you're opening this up for a retirement account and you don't want to touch the money, or you're opening it maybe for a child, then it's not worth it paying more than $1 a month. So hopefully, and the other thing I'll say about this is these plans were actually created by Vanguard, BlackRock, some of the best well-known and reputable brokerages out there today. And they're very well done, very well done. So I suggest everybody that is new to investing, that doesn't know what they're doing, to check this out and give it a shot. Start investing right now, because like Warren Buffett says, the best time to start was yesterday, and the next best time to start was today. All right, so thanks for listening, guys, and until next time.